What's up, everybody? Thank you for watching today. My name is Joseph Brown, and this channel is Heresy Financial. Fair warning, this video is basically just one big advertisement for my options training course. And so if you're not interested in hearing about my options course, feel free to close out and go on to the next video. Due to the current market environment and the coronavirus panic that we are going through right now, and also just due to the financial hardships that most people are trying to endure right now, I wanted to make my course available for a much cheaper price than I normally have it at. Normally it costs about $270. Right now I'm running a sale. I don't know how long I'm going to leave the sale on, at least for the next 1 to 2 weeks. But I wanted to give people an opportunity to go through my options training course. It costs $37 right now, so I am running a large sale on the program, and I wanted to give everybody the opportunity because right now, with how volatile the markets are, number one, there are some pretty good opportunities to make some pretty good money if you do a little bit of trading here and there. And number two, it's now more important than ever to understand how to hedge, specifically using options. So I wanted to make sure that everybody who wants to has access to my program. Like I said, it's only $37 right now. I'll probably be running that sale for about 2 weeks. Just wanted to give you guys all a chance to participate and sign up for the course. It's all video based, and so if you've been around my channel at all for the last couple of videos even, you know what you're getting. Now, who is this course not for? Number one, this course is not for anybody who already knows how to use and trade options. So if you're already very familiar with using options, don't buy this course. You're probably not going to get enough out of it to make it worth your money. Number two, it's also not for anybody who doesn't have any investing experience whatsoever. If you're a brand new investor and really have no familiarity with the stock market or general investing terms, then I would not recommend this course for you. So this is for somebody who already has some general understanding of the markets and investing in general, and you'd like to kind of take it one step further to be able to use options. And so we go over the mechanics of how the options market works. We go over pricing. We go over the components of the contract, and then we go really in depth into the most common strategies. They'll give you the tools to be able to hedge, to produce income, and to do a little bit of low risk speculation using options rather than stocks. So just to give you guys an example of some of the ways that I've used options, even just recently in this time, let's take a look at a very specific trade that you would be comfortable placing trades like this once you've gone through the course. So I'll throw this up on the screen for you so that you can see it in more detail, but this is a chart of SPY. That's an ETF that tracks the S&P 500. Now, when we started experiencing the sell-off, it was February 19th was the top. So we sold off, and on March 2nd, I purchased a put option on SPY. Now, if you can see, on March 2nd, we had experienced a little bit of a rally. And so we had experienced, a good number of days of a steep sell-off in the market, and then it was the rebound after that. And so I looked at that and I thought, hey, we've had a bounce, but I do not think the selling is anywhere near over. And so because we've had a bounce, I'm going to take advantage of the fact that puts are cheaper right now because the stock market has just gone up for the past 2 days. And I'm going to purchase a put that basically will allow me to bet on the market falling a little bit further from here. Now, the 2 days following that, the market did continue to go up. So my put option for the next 2 days lost a little bit of money. I did not close it out, but I purchased the put option for 67 cents. And if you know anything about options, that means it cost me $67 because you multiply the price per contract by 100 to get your price. And so it cost me $67 to bet on a fall in the price of the S&P 500. Now, contracts have expiration dates, and this particular one had an expiration date of April 3rd. So I bought it on March 2nd. I had 1 month for the stock market to go down a significant amount and realize a profit on my contract. Now the strike price of that put was 240, which would mean that if I held the contract until expiration, then the price of SPY would need to be at least 67 cents below $240 a share for me to break even on that contract. But traders really never hold on to options all the way until expiration. You're most of the time are going to close them out before expiration. And that's what I was planning on doing as well. Well, as you can see, after a couple of days, the market started to head back down. And on March 13th, I closed the put option. Now you can see we did have a big drop in the stock market, and I waited until the next day. It was a Friday, and the market started to rally again. Now, at that time, I chose to close it out because I had no idea what the federal government, what Trump, what the Fed, what anybody was going to announce over the weekend that might make that little rally continue. Ultimately, I still felt the market was going to go lower, but it's a trade. And so I wanted to be able to take my profits because I didn't know what it would do over the weekend. I didn't want to get trapped in a position and have to close out at a much worse price come the open on Monday. On that Friday, March 13th, I closed out my put for $12.70 per contract. Multiplied by 100 means that I sold it for $1,270. That's right. I bought it for $67 and I sold it for over $1,200. And that was when the price of SPY closed near $270 per share, and the strike price of that put was $240 per share. And so this is a really powerful example of how you can use options in order to trade these volatile markets and in order to compensate yourself for some losses that you might have on some longer standing positions. Because let's say I had just been long SPY. I had a large position, a couple hundred shares maybe of SPY in my account, and that was a long-term investment. I can use put options to bet on a fall in the price to give my overall portfolio value a little bit of reprieve if that happens. And if I would have been wrong and the stock market would have only gone up from there, guess how much I lost? $67. And so it's a great example of a way that I used options to very conservatively speculate on the drop in the S&P 500. I could have also been using that exact same trade to basically hedge an account that was invested in a way that was similar to the S&P 500. And so in my course, it's over 4 hours of video-based educational content. I'll go through example after example. I use lots of analogies. If you've been around my channel at all, you know how I teach, you know how I explain things. And so if you're interested, if you've never traded options before and you have at least a little bit of investing experience and you want to learn how to use options effectively, buy my course. It's $37 right now. Screaming deal. I don't know how long I will keep this sale on for, but I have it linked in the description below. Thank you so much for hanging in there with me. I know this whole entire video was basically just an advertisement for my options training program, but ultimately I do think it's important for everybody to understand all of the investing tools that are available at their fingertips, especially in market times like this, so that you can hedge, you can produce some income for yourself, you can do a little bit of speculation and make some additional money here and there in these hard financial times. So check it out. It's $37. It's linked in the description below. I really appreciate you guys. Thanks so much. You guys have a great day.